All right, hey there. Good morning, everybody. It's a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 9th of August, 2022. I'm Christopher Inks with Texas West Capital, coming at you live from Bernie, Texas, just north of San Antonio. Hopefully, y'all are doing all right. Bitcoin doing a little pullback right now. The dollar not making any real advancement upwards, so hopefully you guys are holding your fear in check. But man, oh man, we're still seeing it. Bitcoin's been doing this sideways thing gradually up since June 18th now, right? Almost 2 months now. Making higher highs and higher lows, and everybody still freaks out the minute it pulls back a little bit. That emotion, guys, is going to kill y'all in the markets. You got to get a better understanding of risk management. If you can do that, you should be all right. Even without really understanding, or whether you really believe that the bottom's in or not, by using proper risk management, all this nonsense, all this fear, pretty much goes away, guys, because you're not locked into a position. The fear comes from the idea that you're going to be in a position you're going to lose a lot of money, right? Or that you're going to miss out on something rallying up, right? But that fear of losing is really strong, as human beings. And it's a negative fear, I say negative fear, what I mean is as opposed to fear of missing out, right? But it's pretty tough to deal with. And, unless you're using proper risk management, you're going to have a lot of trouble dealing with that day in and day out. So definitely, be thinking about that. What else happened here, man? Let's see. Trump's Mar-a-Lago estate there in Florida got raided by the FBI. Man, we knew that was coming. But, big deal being made about that. And, I don't bring that up for political anything. I just bring that up into an overall, to just kind of comment on this whole social mood thing, right? Because we've got that going on, which has got everybody seriously divided, people that that believe in Trump, others that don't. Others that, are totally into Pelosi and getting the more progressive Democrats, right? And so she does her thing. She runs over there to Taiwan as China's doing this little incursion thing, right? Man, oh man, just all that nonsense going on. We got Russia and Ukraine over there. The world's done lost its damn mind, right? I mean, that's what it seems like, right? But as traders, it is something that you want to kind of keep your eye on, just to kind of get an understanding of what that social mood may be. But remember, these are all reactions off social mood, right? So the social mood is a certain way, and it leads to these things. This is the thing I keep trying to explain to you, right? It's not that, these things happen and it leads to a certain social mood. No, the social mood comes first. So however people are feeling in general, as a society, as an area, as this area of the world, leads to what kind of happens there. So we've got all that. We've got we just had the what was the name of that act that just passed? Anyway, it's going to give IRS funding to double its size. Now, to be fair, the IRS, I'm not a fan of the IRS, but if you look in terms of it as a business, it's been seriously short-staffed for many years. It's been decreasing. Now, apparently there's enough money in here to hire 87,000 new IRS agents. And so, really, people rightfully have a little fear of this. Why? Because government always overreaches. Government never just goes after the richest of the rich, right? The people that it always comes down to are the middle class. They're the ones that always end up get caught hold the bag, right? And so Biden's been approached and said, hey, you're going to guarantee that they're not going to, look at people under 400,000, all these extra agents. They're just for people that make over 400,000 a year. He wouldn't say yes. He wouldn't confirm that. So, again, George Carlin. I don't know if you guys have ever watched George Carlin, but he had this. He was great, man. He was a great, just kind of like a commentator of what's really kind of going on, right? Didn't care. Didn't really mind his P's and Q's. But he had this great bit where he talks about, and I think it's a little bit lopsided. He basically says, the rich remain rich, right? The middle class pay all the taxes, do all the work, and the poor are there to scare as he said, to scare the shit out of the middle class to keep them coming into work every day. And really, that's just commentary. This is commentary from from his bit from 20 plus years ago, guys, and it's still today. The middle class carries the brunt of what's going on there. Everybody says fair share, but fair share is an emotional kind of phrase. But at the end of the day, whenever government does something, it always adds burden to the middle class. So if you find yourself here in the U.S. in the middle class, you can usually expect that that's what's going to happen, regardless of what the mouth points are for those in government talking about what's going on, right? It sucks. It really does. It just makes life more and more difficult. But just this craziness going on throughout the world. That's it. Biden signed the CHIPS Act, right? CHIPS and Scientific Act or something like that. There's going to be funding then, government money going into chip production, facility creation here in the U.S. To strengthen and safeguard, chip production and whatnot. I think if you're looking for that, I think probably the biggest benefactors of that, chip-wise, are probably be Intel, Texas Instruments. I think those are probably the two biggest ones there. I've got a third here. Maybe. Oh my gosh, what did I do with my list here? I always have my kind of talking points here, and sometimes forget them. Oh, that's it. What do you call it? TSM, the Taiwan Semiconductor Manufacturer. Now, of course, they're from outside the U.S., but over the last couple of years, the government subsidized their local. They built like a $10 or $12 billion plant over there in Arizona that our government subsidized, and so I can see them probably calling out to them and trying to get them to create more production facilities here, and so I think those will probably be the biggest places if you're looking for chip manufacturers that'll get a boost from that. So if that's something you're looking for a little bit longer term, that might be something to kind of do a little bit of homework about and look at. So lots of stuff kind of going on there, guys. We've got CPI coming in tomorrow. We had a huge, last week we had a huge jobs increase. I think we were expecting around 260,000. We got around 530,000. So the Fed has those two mandates, job growth and inflation, right? Taming inflation. And so, with the jobs popping off like that, we'll see what the CPI says tomorrow. But, what's interesting about the CPI tomorrow, and so right now we're looking at probably one more 75 basis point hike. Depending on what the CPI says tomorrow, could we get a full, 100 basis points? I don't know. But let me see here. We do have this. And so consumers are expecting inflation to slow down, which, to be exact, they're talking about the July respondents, right? Expect inflation to run at about a 6.2% pace over the next year and 3.2% over the next 3 years. And that's a huge decline from what they were expecting previously, which, as you can see here, was 6.8 and 3.6 from June, right? So a huge drop-off from a month prior. Expectations for food increases fell at the fastest rate in survey history and the second fastest for gasoline prices. So the Fed can at least look at that, right, when they're looking to kind of decide what they're going to do here with that interest rate. But again, guys, I still stand by what I think is going to happen. I still think end of Q3 running into Q4 is going to be the last real big hike for the Fed. I think they'll start pulling back after that. So we'll see if we can get that. And if so, that would work out really well, right? So yeah. Speaking of the chip thing, right? So we've talked about this previously over the last year and how we had this shortage of chips. So cars, people were waiting longer to get their vehicles because you need those semiconductor chips in the vehicles, right? And how the price of the vehicles were raising because, again, limited chips and all. And so I guess there's been this big boon about people buying a new vehicle and then reselling it for huge profits immediately. So like you buy something at $35,000, you sell it, that day or the next day for $45,000 basically. And so you've got the manufacturers now kind of coming in saying, listen, if you do that, we're going to nix the the warranty on it. So yeah, we'll see how that continues to happen here. But man, just you guys are living through a really kind of interesting time right now. I hope y'all are paying attention, especially as traders, right? Not necessarily good, but definitely quite interesting times, right, guys? So who's here already? Hank's here, Jared the Great, Bamboo. What's going on, guys? Oscar's here. Blaze, what's up, man? Data's here. Let's see, who is this here? Poison 4Y, what's up, man? Good to see you. J.W. Smith checking in from a slightly less hot Houston, right? Blaze is bringing up the CHIPS Act was signed today. Yep. Let me see here. Kind of finding out with you guys here. Baltazar, what's up, man? Let's see here. Who else should be the ones to carry the burden of living in a society? Hank wants to know. Oh, Hank, we're not going to get into your personal proclivities, right? Your personal thoughts. We know what they are. They differ significantly from mine, which is fine. Again, doesn't make me hate you, which I hope mine wouldn't make you hate me, right? But again, you've grown up over there in the Netherlands, right? I've grown up in the U.S. Well, I've grown up all over the world. I moved all around as a kid, all over Asia and everything, with my dad being in the military. So, I'm not like, U.S. centric and whatnot. I've experienced, a lot of other places in the world as well, in my formative years. So, but yeah, they're not meant to go on with there. But man, oh man, right? Gerardo, what's up? He says, Qualcomm, they used to make a ton of chips for a while. They did for a while, right? Abdel, what's up? You think NVIDIA? HJ, what's going on there? Blaze has said may potentially be a buyer's market in real estate again. We might see what's going on here. We'll see what happens. We've pulled off pretty good. I think there's still here in the U.S. anyway. I think we've still got quite a few markets that'll probably drop pretty good still. But overall, is the real estate market going to crash overall? I don't know. I think there's the possibility for it. I think definitely certain areas will. Again, you start looking at some cities in Florida, like maybe, I don't know, Clearwater or something like that. You look at Boise, Idaho. You look at Houston, Texas, maybe even. They saw a big... faster than average rally, them and even Austin rise. So you might see those prices come down harder in those areas. But we'll see. We'll see if that drags down everything overall. Chris Rock, what's up, man? Checking in from Pittsburgh. Scott Blackman, good to see you. Chris Day checking in from the UK. Man, we got three of y'all, or two of y'all right there. Scott said, hi, Chris. So I thought that was there. Let me see here. Matthew, what's going on, man? Good to see you. Checking in from Dallas. Andrew also here, and name Mr. Wilkes and Beak Vake. I see you guys there as well, right? So anyway, yeah, so lots of stuff going on, right? So, a lot of times new traders come in and either they're over inundated with all the information and they're not sure how to deal with it, or they just completely ignore everything and they just kind of throw money out in the market like they're doing little scratch-off tickets, right? And you guys don't want to do either one of those, right? You kind of want to figure out what's the general idea of what's going on. And so, one of the better ways to do that is to watch, your stock market indexes, right? You look at the NASDAQ, the Dow, Russell, if you want, S&P, stuff like that, and kind of get a general idea for the markets to help you maybe understand what everybody's been kind of feeling. But remember, these are always secondary, guys. So as that social mood kind of changes, the markets follow. It's not that the markets do something and cause people to do something, right? So, man, kind of a thing at first. This is why I say that trading is simple, but it's not easy. That doesn't mean you can't do it, right? I mean, that doesn't mean you can't do it. Obviously, we're doing it, right? People doing this every day. But you do have to have a realistic expectation of what's going on, of what you do know and what you may not really be knowing. You got to be humble, man. You got to be open to understanding that things are likely, especially if you're new to the market, likely not what you think. I think, the one thing I've noticed in the 25 years that I've done this and talked to so many traders is that we all generally, for the most part, come in with the same wrong ideas about the market and trading and investing. And only those of y'all that actually figure it out, it's a very, very, very small percentage. Those of you that are willing to step back and go, okay, I'm not going to be egotistical here. I'm gonna, I want to figure out how this works so I can be successful with it. It's a very tiny percent. Y'all are the ones that actually end up going on and end up being successful. Most of the people that come in are out, and they're out pretty quick, right? What do we say, like 90 somewhat percent in the first 3 months, in the first 90 days are out of the market. New entrants. I mean, it's pretty crazy, right? So, just take that into consideration. That right there doesn't tell you what you need to think or whatever. It just tells you, listen, the odds are if you're new to the market, you're completely wrong about the way things work. And most people can't accept that. Most people are too full of their ego to accept that they can't possibly know, because hey, they can put money in and they can be in the market, right? It's like politics, it's like religion. Everybody thinks they're qualified, right? It is what it is. Let me see here. Oscar says, hot CPI times 2 with this NFP will force the Fed to raise rates with 100 points, or are you still on the last hike by 75 and pivot after? Yeah, that's what I talked about earlier. I think we're coming up the last one here. Whether it's 75 or 100, I mean, I'm not telling you it's going to be 75 or it's going to be 100. I'm telling you, I believe this is probably the last, kind of like the high here, this big hurrah as far as the interest rate hikes go, and then I think it starts pulling back. Now, that doesn't mean it necessarily goes, if they raise it 75 this time, it doesn't mean it necessarily drops to 25 the next time. But, I don't think it continues to rally higher and higher. Just because the market itself is, even though the CPI number is where it is, even though jobs number is where it is, remember we've talked about other things like the number of new jobs that are available, or all the firings that have gone in, and all this other stuff that eventually finds itself into that unemployment number. Not to mention the fact that where the unemployment is at 3.5% is that historical low area, right? Every time historically for decades that unemployment has gotten to this area, that's marked in. It usually then reverses and heads up, right? So I see no reason for that to be any different now. I mean, it's always been. Now, of course, past performance not indicative of future, results, right? But, when you look at that for decades and decades and decades, and it's always been that way, the very few times it's actually gotten down this low, it's turned back up, right? Unemployment's gone back up. There is absolutely no reason to think that it would be any different this time. Why would we think that, right? So, yeah. That's what I'm kind of thinking there anyway. Deadly, what's up, man? Good to see you. Let's see here. As always, guys, you can join us here at howtotradetowin.com. We'd love to have you there. Just go right over here to the Join Us. And right now, we still do have this special going on right here, right now. And so this gets you 50% off of Tier 3. It's already in there, so when you go over there, you'll see it's already marked in half. When you do that, you get signed up, and you'll get an email that tells you how to sync your account on the website with Discord so that you can see the Tier 3 channels. Once you do that, just send me a message there on Discord and let me know. Do you want crypto, Forex, or U.S. stock signals? And I'll give you 6 months of them for free, okay? So we're doing that right now as we just launched that. You can come in here. I'm still getting the separate Forex purchase here right now. But right now you can, if you just want to just join the signal services by themselves, you can do that right here. If you want that special, just go right here to Tier 3, go down to Annual, and you'll see right here it's in half. And that'll get you set up with that. So, again, the price on this here is over half off on the regular month-to-month for the signals, and you're getting Tier 3 for a year, which will teach you how to trade. So, like I said, we got people that now work at funds as traders. Scott Melker's another guy came off here. His name is a big influencer there for crypto and whatnot. And, so we just continue to do what we do here, and hopefully you'll join. We'd love to have you there. Right? Let me see here. Where is my chart here? Is that what I want to see? Yeah. So this is a Bitcoin futures. And it's, this was the one that kind of went down later here, right? This is June 30th low here. We had the low on June 18th for Bitcoin for, spot with Coinbase and all that. But, you know, again, looking at this as a 1-2 and then maybe a 1-2 here. This right here is 1. You know, you've got 5 up here. This could be 2, or this could be a flat correction here for 2, which means you'd expect it to come down here around this 22,360 area. So it'd be 1 and then A, B, C down here. And that might be what's happening at the moment. I see nothing going on here that shouts, hey, we've got to come down way down here, though. Not right now anyway, right? So, as you can see here on the 6 hour, you know, we've almost reset down and oversold on Stochk RSI. RSI sitting here around neutral, just at the lower end of neutral. So we'll see what we can get off that. But again, you know, just trying to, it's this area right here. So, you know, once we're out of this area, we should rally on back up here. Remember, we've got this weekend gap up here. It's just a weekend gap, no big deal. Regardless of what anybody wants to tell you guys. There are specific types of gaps, 3 or 4 of them. Weekend gaps are, you know, there's other ones that tend to get filled. We can almost, you know, bank on them getting filled. But weekend gaps, you know, usually, they might get filled, but it's not with the purposefulness of the other types of gaps, like breakaway gaps and stuff like that. Because it's just a gap having to do with the fact that the market's not open during that time. That's all. So it's a very normal gap. So nothing specific about it there. If we jump on over here to what we've got going on here, again, you know, the same idea here. The idea that we've got this 1 and 2, or a 1, A, B, and then we'll have C as a 2 here. Now, in this case, you know, that rally up there is not 90%. Right here. Doesn't even hit the 85.4. It's a 78.6. So it's not a flat in this case. But if we do continue to break down here below wave 2, it'll say that this is A, this is B, and C's got an initial target here at 21,975.5. Is kind of what I'm looking at there. Now, it could stop short. I mean, it could get right here just to the daily pivot at about 22,250. We could see it rallying out there. But at this point down here, there's 21,975.5. At that point, wave C would be equal to wave A. So, you know, again, we always keep that in mind when we're looking for that wave C, whether or not it actually gets there. Wave, you know, if this is to stay here, it'd be like a 1, 2, and then a 3, and then A, B, C, D, E is 4, and then 5. And so that's how you get 5 out of this. I'm not sure that I think that's necessarily what happens. I think this is you know, this looks like a triangle here. So definitely could be A and then B, you know, 1, 2, 3, 4, 5, and then B as a triangle, and then C up. This is what I was talking to Discord about the other day. You know, as far as a possibility, if we continue down from these other, you know, continue down into this area here, you know, that's what we'd be looking at as a triangle there. But, you know, could be maybe 1, 2, 3, 4, and then a 5. But that's a little 1 with a large 4, so that makes, you know, makes it questionable. But if it is, anyway, we've pulled back from the swing high here, 70.5%. You know, again, institutional level, rallied back up right on the 1 hour pivot. We'll see if we can get that rally up off there. The 1 hour, of course, is reset down here into oversold. 4 hour Stochk RSI reset into oversold. We've still got a bit of hidden bullish divergence here. So we've got a lower or a higher low here in price, barely. We do have a lower low here, it looks like, in the RSI, the 4 hour. So definitely want to watch what's going on here. I mean, basically, it's this area right here, guys, where you have this support, resistance, support, support, support here. And that's kind of where we tagged. It's not an overly long lower wick with an overly short body. So it's iffy about it here. But, you know, this could be A, and then A, B, and then C down here. Or it could be 1, 2, 3. We'll look for 4 and a 5, which would then be interesting, right? Because what we would expect is for it to drop down below the wave 2 here. If you're getting 5 in before you get to the swing low here. That's just a 1, 2, and then you break down 3, 4, 5 coming down. But like I said, nothing jumping in here that says, oh my God, we should be so scared it's going to go down to a new all-time low at the moment. We will see how it plays out. Right now on the daily, almost a bearish engulfing. It looks like it's opened a little bit lower here. We closed at 23,815 and 65 cents. We opened at 23,815 and 68 cents. Oh, okay, so it is. So it is. It is bearish engulfing right now, which means a pause, potential reversal if it closes as bearish engulfing. So we'll see how the daily works out. You can see that we're above the daily pivot. So, nothing overly worrisome in the way that it's set up at the moment. Let's see here on the 15-minute. We are kind of breaking out just above oversold here with the RSI, but Stochk RSI is overbought. So we'll see what goes on here. If this is 1, 2, 3, this should be A, B, and C for 4. So we should look for a rally up here to around 23,245 or so, 23,220, 23,250 kind of area. That would be 4, and then we'd have 5 coming down. Should be, yeah, just about this S2 pivot on the 15 minutes, so right there at around 22,650 or so, 22,660. So yeah, so we'll see. Again, it's just a pullback right now. Nothing to get all worried about, and all those things that people tend to do, right? Let's see, what do we have here? We're right here in the middle of this 12-hour cloud that we've been watching. So again, rallied up to resistance. That's this resistance all the way over here from the 12th of June. 13th of June, sorry about that. Pulled back, found support, rallied up, dropped on down, came back up, found support again at that low. Resistance at the high, support at the low, resistance at the high. 12-hour pivots where we're at the moment. Again, nothing changing on that at the moment here. Still have that 200 12-hour MA right here coming on down as well. So again, I continue to say that I believe a breakout above this area is going to have that nice big move up into 30,000. And in doing so, we'll take it violently, aggressively, impulsively through that 200 MA right there, as well as the top of the cloud there. And so the idea generally should be that if we get that, it rallies up strong, right? Gets rejected, come back, maybe retest that as support, and then breaks out. Or as I said, the other thought is that we have this this rally up through the 30, pulls back to the 30, and then continues up. So I think either we hit the area, we pull back toward this 200 MA here on this 12-hour and whatnot, and then rallies back up off that, or it breaks out through the 30, rallies up, comes back to the 30, support, and continues up. I see no reason to change that as we sit here at the moment. Let's see here. Let's see here. Where's the bear? There we go. Bear USDT. Still looking at that, of course. We have 3 waves down right now off this swing high here. So, again, 3 waves down. It's within the swing low here. Maybe just be a pullback and we head up a little bit higher. If we do, then, of course, price will come down lower here, right? Right here, the price will come down here. And then we'll get the continuation down toward this ascending channel support. The high volume node there around 10,280. And, of course, that would see price rallying back up. Again, this is Bitcoin here. So, again, off that June 18th low, guys, low, high, higher low, higher high, higher low, higher high, higher low, higher high. Currently, potentially a higher low here, but we have to break out and make a new higher high first. Because obviously, this is the last high, and if we don't break out above that, then we could still turn down as we're looking at here and break down below here and make a lower low. Still a higher low, though, on that. So, again, everybody's been telling you not to buy since, since this swing low down here at whatever it was, 17,000, 500 or 600 or whatever. And we've rallied up here, guys, to, what have we hit so far? We've been up here 24 and a half. I mean, that's significant, guys. I noticed the one account that I continue to reference, without naming names, has been kind of quiet here the last few days, finally. But as this continued to rally up off this low here, they kept swearing to God, that you were going to get rejected. New lows, new lows, new lows. Worst, largest bull trap ever, and then finally they're just kind of quiet right now. But it's only taken them about 2 months to get there. It is what it is. But that's why you don't go guaranteeing people things. You look kind of silly, right? How do you know what the market's going to do? We don't know what it's going to do. You guys have to understand, as traders, you have an idea of what it may do. That's it. And as it progresses through certain levels, you may become more confident of what you think it's going to do, but we never actually know for sure what it's going to do. Nobody has a crystal ball. I still want to say silver. Why? Nobody's got a crystal ball though, right? So, guys, just be wary of that. Whether you're listening to somebody else guaranteeing you something or you're trying to guarantee yourself, stop with the nonsense. Do you want to be a trader or do you want to be some silliness online? I mean, really, that's what it comes down to. And, I'm sorry if that offends you. Let it offend you. Get over it and move on. And, again, the goal is to become a good trader, guys, a successful trader. You can't do it while you're always guaranteeing or listening to people who are going to guarantee you what's going on. As I continue to tell you, think of what's happening with the markets. It's all fluid, guys. And the more, you have an idea based on how you may look at the markets about what it's going to do. But you should definitely have an area at which point you say, listen, that's no longer, likely. And so as price moves closer toward that invalidation level, you are fluidly becoming less and less likely to be correct, right? As it moves closer towards your validation level, you're becoming fluidly more and more likely to be correct, right? More significance in that, but nothing guaranteed. I get people on here. I haven't had it in a while, but people used to always ask, what percent chance do you give it of doing A, B, or C? What, you want me to run statistical analysis here and tell you? No, what you're asking for is my gut feeling, and who cares what my gut says? I don't care what my gut says, except when it says it's hungry. I get hangry, right? But really, guys, that's kind of where we're at with that. So I hope that you're not taking people seriously when they guarantee you that price is going to do something. And it doesn't matter if they've been right before. It doesn't matter if they've been right the last 10 times. Maybe you can give them a little bit more deference to potentially being correct, but never buy into the I guarantee you bullshit. My language, sorry about that. Nonsense, right? Don't buy into that. JW, what's on, man? He says, Chris called the 17,000 swing low live time on Twitch stream. I saw it. We didn't do that on Twitch. We did that on, I just set up a private viewing for you guys. I think we did it on Vimeo, didn't we? It's still on there. If you're new and you've joined us since then, the recording is still on there. You can just go up through the members announcements channel and find that link. I gave a link there, and you should be able to access it there. If you haven't, let me know. I'll give you guys the link. But yeah, we were talking about that. Got stopped out of the first trade. But again, it just goes to show you that I do follow, what I preach here, We looked at it potentially being the low, where I got in, and then it dipped just below that, knocked me out. I didn't hold on to it. I said, listen, we're out because it could come just a little bit lower and turn around, then be the low, or it could go a lot lower, right? And then I ended up buying in afterward, right? So not the lowest low, 200 above, but pretty close still. Multiple times since then, I put those trades out there, still sitting in them, right? With that, so we'll see. Yeah, Vimeo. Baltazar 10-second fiesta. Now remember, I zoomed in on that just to kind of help you guys understand, not to trade at that very short time frame. But if you're looking at it for things to help understand a larger time frame, that was how you do it. So yeah. Yeah, I tried a few platforms after the initial YouTube debacle. Yeah, that was all fun, wasn't that? Ugh. YouTube, what a pain that rear end that was. Let me see here. Hank says he has a crystal ball. It's just a paperweight, but it's an actual crystal ball. And it tells you absolutely nothing, doesn't it? Except if you drop it on your foot, it hurts, right? Would it be possible to take a look at the Litecoin Bitcoin chart? If there's any time left, interested in long-term outlook to accumulate more Bitcoin? Yeah, remind me here in just a bit. So anyway, so that's what we're kind of looking at here, guys. We'll see what happens. Right now, we're at a good support area at the moment, but we could drop further, as I showed, and be looking down toward that daily pivot area. Should be even stronger, right? So we'll see what happens here. Don't be in a hurry. Look for some confirmations, right? So what am I looking for? As long as it remains above this wave circle 2 low here at 22,392 and 88 cents on Coinbase, as long as it remains above that, I'm looking for a breakout above 23,929 and 35 cents. If we can get that, I believe that wave 3 is likely in progress, and we'll be looking up here around 25,875 and a half or so for that. Don't forget the larger target, though, wave circle 3 right now, while wave 2 stays where it is up there at around 28,930. Wave Roman numeral 3, 33.96, and then wave parentheses Roman numeral 3 up there at 33.236. Those targets can move, obviously, depending on what's going on, but as long as wave 2 holds where it is, this is what we're kind of looking for as far as it rallies up there, and we'll keep adjusting as the waves subdivide or whatnot on their way up, all right? Let me see here. Daily rising wedge. I don't know. How would you count that? If you're looking at Elliott wave, it'd be 5 waves, right? How would you count that? I don't necessarily think it is, because again, maybe we'd have to be like an ABC is 1, 2, ABC is 3, 4, ABC is 5. The problem with that, though, I believe, is that wave 3 here is the shortest. I think when I looked at that, wave 3 would be the shortest. Let's see. Yeah, because you got wave 1 down here, and so it goes up here. And whoops. And if we look at the first wave there, the first 3-wave rally, that's above wave 1 here. The 1-to-1 ratio right there goes above it. So yeah, that wouldn't be because wave 3 would be the shortest. So yeah, again, because of all the overlap. I mean, now with all the overlap, if this were to be a leading diagonal, it would have to be. It could be 5 waves up for 1, 3 for 2, 5 for 3. So a 5-3, 5-3, 5, or it could be a 3-3, 3-3, 3. So again, looking at ABC here. Maybe, okay, maybe we can do A and then B. This would have to be 1, A, B, C is 1, 2, A, B, C is 3, 4. You'd have to get an A, B, C out of this here to be a 5. And so you can get an A, B as a flat, and then C as an ending diagonal. But I don't think, I think the counts look much better as 5s, though, instead of 3s coming up there. Let me kind of zoom out here a bit. Show the count again in there. I can't say it's definitely not, just because, man, sometimes the counts get really crazy. But yeah, I mean, yeah, so maybe if we do it that way, it could be. Again, the idea would be that you have an A. But see, that first one, is that 5? I mean, we have to get 5 here, so if that's an A and then an A, B, C is a flat for B, but then this here has to be, again, A, B, C is 1, 2, A, B, C is 3, 4, A, B, C is 5 there in that end somehow. Let me kind of zoom out here a bit. See, yeah, I'm just not feeling it a whole lot. But again, if we get that further drop back where we're kind of getting around the, again, still around that 20,000 area, that's going to look much more like it. So, I mean, if we're breaking down below, this over here, this is 18,892. Again, I'm really more interested in this kind of this 20,000 area here. As I continue to say, if we're dropping through that kind of takes us below, to the bottom end of this high volume node, which I think makes it increasingly more likely we may head down lower. And in that case, we can see, okay, can we get, an ending diagonal for wave C maybe out of that? It'd be A and then a flat for B. And then, again, ABC is 1, 2, ABC is 3, 4, and then in here somehow ABC or I don't know, something in that to get 5 out of that slightly higher there. So yeah. If you're just drawing, I mean, yeah, you can draw this this lineup, but again, it's coming from this area, not from this one, right? Because if you're, let me go ahead and make a copy here real quick, so I'm not drawing on Discord's chart there, on my people's chart. Let's get this set up there. Okay. Make sure it's the right one, man. Okay, yeah. All right, so, I mean, if you're looking at this, is this a wedge, right? I mean, you're going to have to finagle with it to kind of make it fit what you want it to fit, right? So I don't know, you'd probably have to draw out something like that, which again would have to be, okay, A, B, and then this could be C as an ending diagonal maybe here, right? Because otherwise, if you're trying to draw it off the bottom, you're just kind of looking like this, right? Expanding, broadening wedge, right? So, yeah. Or you're going to draw from back here, and then you're going to draw from here, But here, this is the problem when people are just drawing arbitrary lines on there. They tend to just kind of pick whatever makes it seem like it's working in their head, to make it seem like it is. So, you could maybe draw like that. But again, even, again, just because it would be a wedge, for instance, just because it looks like a wedge here, like a pattern, a wedge, doesn't mean it has to be the top and down. Again, that could be 1, 2 or 1, 2, 1, 2 kind of thing going up there, right? So, you got to pick your poison and decide what you're going to trade, right? I'm much more interested in pivots than wedges here, right? So, if we're dropping impulsively below the pivot here, I need to see a bounce here at the S1. If we're dropping below that, again, that's almost that 20,000 area. If we're dropping below that, then I'm thinking we're probably headed down. It's still not a guarantee, but I think the odds are increased that we're heading down until we actually are dropping, especially impulsively below the S1 pivot on the daily. I think overall we're still looking higher right now. In terms of market structure, again, we've got these higher highs and higher lows. So as far as coming off the swing low here, breaking down below this one right here, right? Because, again, this was the higher high, this was the higher low, this was the higher high. So breaking down below this last higher low here at 20,715, that would be the first clue to say, okay, maybe this could be a top and we're heading down lower. But it also could just mean that this is just a pullback. You've got this done, say, maybe, I don't know, wave 1 or wave 1, 2, 1, 2, whatever. And it's pulling back before rallying higher. But that would be where I'd really be interested. I'd look at that, watch that daily pivot for an impulsive breakdown below it. And then I'd watch that swing low right there at 27.15. If through those, I need to see, for me to feel good, I want to see a reversal off the S1 daily pivot here and head up higher. If we do continue through that, doesn't guarantee that, that it's going to go down new lower lows, but I'm definitely going to be entertaining a lot more likelihood of that happening. Does that make sense? Yeah. So that's kind of what I'm watching with that, right? But again, you know, we go over here to bear USDT, right? And 12 hours still hasn't broken down into oversold yet. What does that daily look like? Daily hasn't broken down into oversold yet. I'm interested to see how this candle turns out. We do have 3 down, and we've got a lot of volume coming out on this low here in this wick, right? Which is right about this area, this resistance support area. So I want to see how this turns out here. If we're breaking out above, you know, this swing high right here, that looks like it's 3 down, like we'll have a rally up. But while we're below the this daily pivot, my bias is going to be to further downside for bear USD, which means ultimately further upside for price, right? So again, could be A or W, B or X, and then Y or C rallying up toward this, you know, this EQ of this range here, the pivot, ascending channel EQ kind of area here. But while it stays below that, if it, you know, the expectation initially would be a rally and a rejection there and coming back down. And if we do that, then this should just be a drop down and then a rally back up, right? So yeah. There you go with the wedges again, right? Yeah, I mean, if you think this looks like a wedge, a rising wedge, then you would think that this looks like a descending wedge. Sure. Yeah, I mean, you know, it may make sense, right? Because it's basically the opposite of what this is, right? This is the spot chart. This is that bear USDT 3 times short, right? So it's basically the opposite. That's why I've got them in here, so you guys can see that. The difference, you know, that the way that they are almost the same here, just mirror images, right? Almost, right? So yeah. If you do think you see a rising wedge here, you're going to think you see a descending wedge here as well. Yeah. But, you know, again, for me, it's more about those horizontal levels and watching those supports and resistances than it is about wedges. Because wedges, you know, especially if they're just patterns. The one thing about classical charting is about patterns, right? So wedges, rectangles, head and shoulders, cup and handle, stuff like that. But there's no real... When you go to learn it, there's no real way that says, listen, if it does this, it's going to probably be it, right? If you do Elliott wave and it's a wedge, then you're going to get your 5 count, right? You're going to get it the way it should be. If it's the end of a rally, it's going to be 3 waves, 3 waves, 3 waves, 3 waves, 3 waves, right? If it's the beginning of a rally, it might be that, or it might be 5, 3, 5, 3, 5, right? But you're going to get that count in there. If it's a triangle, you're going to get your A, B, C, D, E with your 3 wave movements in there, right? If you don't know Elliott wave, then a triangle may look like a triangle but may not be a triangle. So you get that 50%. It's going to 50% break up, 50% break down, right? And then there's those other times where it just kind of breaks out but continues to go sideways. Then what, right? So yeah, classical charting, I'm not necessarily a big fan of it because you know, it's just, oh, does it look like it? And then at that point, it's a coin toss as to whether it is or isn't, right? Yeah. Potato wedges are the best. I agree. So yeah, kind of looking at that there. Let me see here. What do we got going on with the DXY? Let's look at the futures chart here. Remember, guys, you can trade the dollar on the ICE exchange. It's the only place you're going to trade that dollar, right? So yeah, so I mean, we've had the drop down, the rally up into the daily pivot, and that's kind of where we're at the moment. You know, is this maybe a 1, 2, 1, 2? Or is it a 1, 2, 3? If it's a 1, 2, 3, we got to get a breakout up here above, what is that, 107.3? Yeah, 107.3 up here. That'll get us 3 down, which looks corrective, and then we'd be looking for another all-time high. Otherwise, it's potentially, you know, 1, 2, 1, 2 here, rejection here, because this is only a 3-wave advance. You guys see that, right? This is 1, 2, 3, right? So potentially A, B, C. So as long as we don't break out higher and instead we break down lower here, that's going to add confidence to the idea this is just an ABC and we're heading down. In terms of the rally, it rallied 78.6 right there. And it's just wicks above the pivot, right? So we're looking to see, does it break down further there? As far as the regular chart here goes, they're usually looking at, again, still not sure whether this is 3 or 5 up here, or 3 of 5, right? So we're trying to see what goes on here. This was really a pain in the rear end, all this overlap here. But I think we got a flat and a flat, and then overall flat. And then it looks like we've got this ending diagonal here. But again, this could just be A, B for this flat here, C with an ending diagonal. So again, we're looking for, does it break out above that 107.3? On this chart here, it's, let me see here, 107.426 here on the DXY chart. Okay, the futures, it's 107.3 there. So, but again, coming off the lows here, it's just 3, right? And so to me, right now it looks like it's A, B, C is W, A, B, C is X, and A, B, C is Y. So we want to see, do we get that breakdown below 105.668, which is going to add confidence to the idea this is just an ABC and we're heading down lower, which again gets me a 1, 2, 1, 2. All right? So if that's heading down lower, that takes the sting off the idea of if you believe that the markets are going to follow opposite of what the Dow is doing, or I'm sorry, the DXY is doing, the dollar is doing, then you'll look for it to head lower. Wave 3, if I'm correct on this being a 1, 2, 1, 2. Wave 1, 2, 3 here, 3 of 3. Minimum expected target of 103. So yeah. You can see that the 1 hour here is broken out into overbought here, almost topped out. Stochc RSI. RSI here, just about neutral. Bouncing off the oversold there. So we'll see what we can get out of that. But, again, today might not be the best day to trade. Today into tomorrow's CPI release, guys. And then when the CPI is released, you've got to be careful if you're in a trade or thinking you want to enter a trade, because there's going to be a lot of knee-jerk reactions. People are speculating as far as what the CPI number is going to mean or what it's going to be, and then what the market's going to do. So there's going to be a lot of supply and demand imbalances back and forth. And so what that means is you could have the direction correct, but you're going to have too large a position size or too small of a stop loss, and it's going to knock you out. And then it'll go in that same direction. So most of the time I tend to stay away from the markets during those big, what turns out to be bigger news releases, just because of those knee-jerk reactions, right? So, yeah, we'll see what happens with that there. Let's see here. See if I can get here. By the way, y'all may have noticed that TradingView was having some issues this morning. I know when I was trying to do my updates prior, to the live stream here for Discord, they were showing charts without the labels and drawings and stuff on them, and it was taking a while for them to even come back in. So I've seen it happen once before in the last few years, and they got it done, fixed within a couple hours. It seems like they might be doing that right now, like it might be fixed at this point. So if you do pull up a chart and it doesn't have any of your drawings or whatever on it, just give it some time, be patient, and it should kick back in. Doesn't really help you a whole lot if you're trying to trade something at that moment. But, again, not a whole lot we can do about it, right? Let me see here. Let me see if I can pull this up. Having trouble getting it. Discord seems to be having an issue now. Well, I'm just go ahead and pull up the charts then here. Straight off here. Oh, gosh, dog it. What am I looking for here? Oh, no. IX. There we go. Gonna pull this back up. Oh, let's see here. What day am I looking at? See if I can get a current chart up here, since I can't seem to get Discord moving. It's frozen up on me, it looks like. God dog it. All right, apologize, guys. Let's see. Here's the chart from today. So, oh, that's not looking good. Looks like wave 2 may be complete here, just prior to the 50% retracement, just above wave 4, right there at the R1 pivot on the daily. We have this ugly candle here, which shows that there was a lot of demand into the beginning of the day, and by the end of the day, there was no follow-through. Demand was exhausted, supply taking over, and today we're gapping down and trying to fall further, which adds confidence to the idea that there's potentially a reversal going on. Dropping below 12, was this 12,260 and 40, 12,260.48 is going to hint that wave 2 is complete. Further breakdown, especially impulsively below the daily pivot at around 11,917 or so, is going to be the first real clue that it is. But we need to see a breakdown below wave B here at 10,850.01 to add confidence to the idea that wave 2 is done and wave 3 is in progress lower. Okay? So, yeah. Let's see here. So that's the NASDAQ. Again, remember, NASDAQ is still strongly, heavily tech. So, you know, if it's coming down, it's likely because tech isn't doing so well. So remember, you got to think of things like Tesla, Apple, Amazon, Microsoft, stuff like that in there. Let's see here. We do have... Oh, gosh, dog it. Is that the right way? Oh, I can never remember how to do that. We'll do the Dow at the moment here. Yeah, let's see here. See if Discord will start moving around for me a bit. Oh, there it goes. All right. And it's frozen again. All right, man. Oh man, I'm just dying on that. Okay. The Dow. Now you notice the Dow doesn't look as bad as the NASDAQ, right? Still ugly candle from yesterday. Still a very ugly candle. But right now we got this small little doji going on. And of course, remember, that's because the Dow itself is much more broad-based index. It's not so heavily tech. And so with that, you know, if tech is doing a pull, you know, at the least a pullback, right? Tech in general, the biggest in tech are doing a pullback. That's going to skew the NASDAQ there, the composite there on that downside, right? But if other parts of the economy are doing better and rallying, well, the Dow's going to show us that, right? Because it's not so heavily technology based there. And so we end up getting this kind of look right here, right? So again, looking for a breakdown below 32,387.12 as the hint that wave 2 may be complete. Breakdown through the daily pivot, especially if it's impulsive, at around 31,970 is going to be the first real clue that it may be. But ultimately, we need to see a breakdown below wave B here at 3143 or so to add confidence to the count and say, okay, wave 2 is likely done, wave 3 is likely in progress, right? Do any of you guys out there trade E-minis and stuff like that? Whether it's for stock market or oil or whatever it happens to be? You guys do that? Let me see here. Oh, I think I might have accidentally closed out of the chat window here. I'm going to have to see. Let me see. It's ES1. That's what it is. There we go. All right. Let's see. So what do we got here? Okay. So again, the S&P is not as heavily tech as the NASDAQ, but it's still pretty heavily tech. And so it looks a lot more like your NASDAQ, right? Today versus the more broad-based Dow. So here's where we sit now. Again, ugly candle yesterday. Pause, potential reversal. This is looking like a confirmation of the reversal. Wave 2 may be complete around 50%, which is wave 4. You know, again, wave 2 generally tends to target wave 4 the lesser degree, right? We do have an ABC here. And so, you know, as we do this here, that may be done. So, again, dropping through 4080.5, 4080 and a half, is going to be a hint that wave 2 may be complete. More confidence given on a breakdown through the daily pivot at around 4,001, especially if it's done impulsively. But ultimately, guys, we still need to see a breakdown here below wave B at 3723.75 to add a confidence and say, you know, for all intents and purposes, we can all but guarantee that wave 2 is probably complete and wave 3 is in progress. So that's kind of how we're watching. Again, the idea is to be fluid, right? So, you know, what I was talking about at the beginning here, wave 2, I believe, may be done. Breaking down through here and then through here and then through here is going to give me more and more confidence that I'm correct. None of that guarantees that I'm correct, though. Why? Because guess what? If this is an ABC or a WXY, we can get an ABC down here and then 5 more up because it could be printing a flat, right? Or let's say I've got this count wrong and this ends up being a wave 4. We could have 3 up, 3 down, 3 up, 3 down, you know, consolidating into a triangle, right? I can't guarantee that wave 2 is complete. I can tell you that based on the count, it looks like it may be. And the first thing we need to see is a breakdown through this level to start hinting that it may be, to start adding some confidence, right? More confidence on the daily pivot breakdown, most confidence breaking, you know, continuing to break down through the, and then you can even go through the wave 1 support there is even more confidence, right? So as a trader, when you know this and you have this set, well, then you decide, okay, what is my risk management? How much risk am I willing to take, right? So you can say, okay, I think wave 2 may be done, and I'm going to take a lot more risk and get in right now. If you do that, there's no reason your stop loss should be any higher than just above the swing high here. Because if we're breaking out through that, then that means that this could potentially be something entirely different heading up. It means that what you think, this ABC, is not correct. And sure, it may just go up a little bit higher and then come down, but it also may go up a lot higher and come back down. There's no reason to be sitting in that. So from a risk-reward ratio right here, you're significantly good getting in here, right? Oops. Let me show you. Oops, wrong way. Sorry. Grabbed the wrong one. Let's try again. All right. So let's say you decided that a breakdown below this swing low, this wick right here, would be your entry, right? Your stop loss needs to go right above there, right? And if you're correct, your target's going to be way down, right? Let's say you're doing wave 3 here, right? You're going to have this target. You know, it says maybe way the heck down here, right? So all of a sudden, your risk reward here is 19.5 almost, right? You're risking very little for a big potential return, right? But the other way to remember this, God, these idiots, Jesus. I hate those idiots. Anyway, sorry, man. The nonsense that they put on their, they come in the bots and whatever. So anyway, I mean, you can see that there's a huge risk-reward potential payoff, right? Here's the flip side of that. Because it hasn't actually broken down below the nearest support level, it may continue up higher. So you have, on a trade like that, there's your risk-reward, but the trade itself is more risky than waiting for a breakdown here, which is more risky than waiting for a breakdown here, which is more risky than waiting for a breakdown here. But if you wait longer, the trade itself becomes less and less risky, but your risk-reward ratio decreases, right? This is the trade-off. If you're not waiting for these levels here, the trade is going to be more risky overall, but you're risking much less. So as a trader, you have to decide where is your balance in terms of how much money you're willing to lose and how much risk you're willing to take to lose that. That's what you guys are trying to figure out, okay? All right. Just make sure you guys understand that. Let me see here. All right. So that's that. What else? We've got oil, right? Can we do oil here? Let me see here. Load layout. There we go. That's what I'm looking for. Crude oil futures. Again, continues to potentially break down here. I've got this still, nothing's changed, the overall count here. The idea that we topped out back over here in March, and we've got a 1-2 coming off that, and a 1-2, 1-2, 1-2, right? So potentially, we've got this kind of breaking down here, which means we should have a big move down if it's going to break down, right? As we kind of get down through this wave 4 area here, which we've kind of dipped right below. So if the count is correct here, right, then we've already dipped down below wave 4 here, which says wave 5 must be complete. Because wave 5 here, wave circle 5, can no longer subdivide. It's dipped down below wave 4. It's done, right? So we had an attempted rally there, which took us here to the 4-hour pivot. Daily pivot is still way up here, right? And so we're looking at maybe A, B, C, or W, X, Y. Probably A, B, C is W, X. A, B, C is Y there probably. You're getting this large bearish engulfing on the 4-hour with another 55 minutes left, so we'll have to see how that plays out. Potential tweezer tops right there at resistance. I mean, it's screaming, as long as it stays like that or worse, it's screaming that it's done rallying and we're headed down in wave 3, right? So, but we need to see a breakdown below 87.22 to add confidence to that count and have that heading lower on that. Again, still looking ultimately, can you lower, lower, lower? If this is correct here, this 1-2, wave 3's got a minimum expected target there of 68.72. What do I think about, what's going on, Void? He says, what do you think about meme coins and shit coins? I mean, I can't say don't trade them. I have to say that again, risk is not, as I was just trying to explain a minute ago, risk is, when you're in a trade, is not just that trade. You get, not just where your stop loss is and your position size and all. That's one type of risk. Other risk associated for what markets are you trading? Within those markets, what products are you trading? What's the larger economic climate? How's that going? So there's lots of levels of risk. So when it comes to meme coins and shit coins, first of all, your risk comes from the fact that you're trading in cryptos, which are inherently much more risky, much more because of their volatility, right? Than usually legacy markets, right? And then within cryptocurrencies, those particular types of coins are more risky than, say, Bitcoin or Ethereum or something that has a lot more liquidity, that has a lot more people that trade it, right? So I think you just have to make sure that depending on what you're taking there, that you're understanding that risk fully. It's not just the position size you're taking in there on that trade. It's, can you get out when you want to exit with the profit that you're potentially going to have? If you're taking something really, really low, right? Something with a real small market cap, even if it rallies up 500%, you may not be able to get out. It may have to come all the way back to 70% or something for you to get out. Now, 70% is a great return, right? But most traders are going to kick themselves and be upset that they couldn't get out at 500%. Just because you want to get out at a specific point on the chart does not mean you will be able to. And that becomes much more apparent with the less liquid, the smaller market cap things you do. And so whether that's the meme coins or shit coins there on crypto, or whether that's pink sheets that you're trading in the over-the-counter market for stocks, they have their own inherent risk because there's so much less liquidity. So even, again, people are often showing you, oh, look, you just need to trade all these low cap nothings and look at how much you can make. Well, just because price goes up there doesn't mean you can make anything. If you put in $1,000 and it goes up 100%, can you get out with that 100% of $1,000, right? Can you get out with all that profit? Because you're going to be put in order. First of all, you're going to be put in order for those that get out, right? So if people are already getting in front of you to sell, they're going to start taking out that liquidity already. On top of that, when you finally get in, again, you're doing that to yourself now. If you've got too much liquidity that you're trying to get out of and there's not enough on that to handle that, well, that price is just going to keep on chasing lower till it finds buyers, right? So yeah. I don't think there's anything inherently wrong with trading them. I think there's good opportunities back and forth with them. I think that if you're looking to be consistently profitable, I think you stick with the larger ones, like Bitcoin and Ethereum and Litecoin, XRP, stuff like that, that people don't really want to trade, right? In general, because you're most likely gonna not get the same kind of strong moves that you get with those other ones in either direction. You just get strong enough, but just not as strong as that, right? In such a short period of time. But more importantly, you'll have liquidity to get out when you want to get out. I think that was one of the most misunderstood things for new traders. They think just because they get in a trade, they put a stop loss or God, heaven forbid, a stop loss that doesn't, that goes through because there's not enough liquidity there to get you out, right? Or a take profit. They think that they automatically are going to get out at that point. And the lower the liquidity in whatever you're trading, the less likely you are. Okay? So yeah. I see people here looking for Bitcoin dominance. So my latest Bitcoin chart, we update this weekly for our tier 3 members. So there we go. I've got us, coming down further down here. Down here toward about 35% is what I'm looking at. We've got all this sideways here. Overall continues to find volume throughout it, right? No significant sell-off in volume there. But as long as wave 2 holds up here as resistance at 44.43, I think we're still looking lower. If we break out above that, we definitely need to stay below this swing high up here at 48.45. If we're breaking out above that, then that suggests that we're going to head up higher here, and Bitcoin may not be bottomed at that point. So yeah, this is kind of where we're sitting with what I'm seeing so far. Let me see here. Is it possible to input a buy order with a stop loss at the same time, or do you have to wait till the buy order completes? Scott, it depends on the exchange, bud. So most Forex brokers, most reputable Forex brokers, for instance, this is a thing. It's not a problem. You put your stop loss, you put your take profit, everything at the time you enter your trade, and you can even often do what's called OCO orders. One cancels the other. So let's say you have this range here, and you want to buy a breakout or sell a breakdown. You can even set it to do that. Most crypto exchanges are not that up to date yet. But you can get something like 3 Commas, which is a bot that you have to pay a service fee to, and they will actually input those orders for you. So just think of it as a layer on top of the exchange. And so you, instead of putting it in the exchange, you'll put your orders into that. And then as that information, the API calls come from the exchange that says it goes through that level, then it does the order for you. And in that case, you're able to do all those different things. Some exchanges, some of the newer exchanges today, are starting to add the ability to be able to add in a stop loss and or take profit at the same time. But it's definitely not what everybody's doing still today, which is kind of sad because we've been in this for how long now, right? Crypto's been around for how long, and the exchange is still acting stupid. So yeah. Hank is saying, Binance, FTX, Finex do support doing that. So yeah. It just depends on the exchange you're looking through. If you're going to get something like a DEX or some smaller exchange somewhere, be careful with that. You don't want to end up the way of what was that exchange up there in Canada where the CEO died and took the wallet codes with him to his death, and so they couldn't get the coins out of those wallets, right? You don't want to be stuck in that, or Cryptopia, which got hacked, right? And everybody lost a lot of money with that. Not that just being a big exchange guarantees that you'll be safe, but there's more to the likelihood than not, right? So yeah. Let me get rid of these idiots again. These brain dead morons. All right, there we go. Not very nice to people that come in with that nonsense in the chat. Let me see here. Big Vape says Quadriga. I don't even know. I haven't heard of that. Oh, was that the name of the exchange there in Canada? Yeah, I think that sounds familiar. Maybe that's what you're saying. Yeah. That was what? That was like a year or something ago. Is it still true that Bitfinex has the most volume of crypto exchanges with big time traders? Yeah. I think they're definitely still geared more toward the large traders, larger professionals, maybe institutional stuff like that. I know Coinbase. The last time I saw their numbers, they seem to be pretty heavily large players as well now as well. So, we'll see. They keep, beefing up their institutional side to what they're doing as well. So, but, again, you don't have to worry about what's going on in Finex to understand what's going on with the markets, right? Because they're all kind of running hand in hand, right? Price itself is not determined by Finex alone, right? So I know a lot of people also put on the aggregate volume. Guys, stop. Don't worry about that. You don't have to worry about that. I trade without it all the time. I do perfectly fine. You don't have to have aggregate volume on there to understand. Because again, your trade, excuse me, the way in which the markets work, they all run in tandem, right? Generally, sometimes a little bit higher or lower than the other ones, but in general, it's not like you're going to have one exchange going one way and the other exchange going the other way, right? And that's what goes on with the market makers and their software and how that all works with the indexes that they use based on multiple exchanges and whatnot. So, yeah, it's just silliness to look at aggregate volume, honestly. Let me see here. Let me see. Sorry, guys, I'm losing my voice here, my throat. LTC Bitcoin. Let me see. I can go right off that this one right here. Let's see what's going on with that. This is consolidation. Looks like maybe a triangle right there. Looks like 1, 2, 3, 4, 5. Oh, so maybe not a triangle. I was looking at maybe like A, B, C, D, E. But off here, that's not going to work. What we got going off here? I mean, that could be an ABC right up to there. It's the 1.23. So usually, wave C will hit that 1 to 1.23 extension. Let me zoom out here a bit, see what the bigger chart looks like. Don't worry about this wick. That's an anomaly, it looks like. I've never actually seen this pulled up on TradingView. You have to excuse me. That is funny. Okay, good job, guys. TradingView. Let me see what the Coinbase chart looks like. See if we can get it without that wick there. It's still got it there as well. Maybe it's not so much. Finex has still got that wick. Yeah, so it looks like everybody's got that wick there. Finex has got a bigger horizon here because it's been around longer. So if I look at this, this looks like 5 up. 1, 2, 3, 4, 5. Or, let me see here. Yeah. And then this drops down here. So maybe 1 and then ABC. And then 1, 2 here at the S1 pivot there on the weekly. We are overbought here. No bullish divergence or anything on there. Again, looks a lot like a triangle here. I wonder. So this could be 1, 2, 3, 4, 5 as A, B, C, D, E as B, and then we have a C still to go up. So basically, this is your triangle that you're looking at here. And then, you know, could potentially get it up here at around, I would look at probably, if it's going to rally up there strongly, maybe toward this area. What is that? 003479 to 003786 kind of area. But yeah, I mean, that's kind of that area where I'd probably be looking. That's a huge bullish engulfing candle there on the 13th of June. Yeah, that's the week of 13th of June. That was right there before Bitcoin bottom on the 18th, right? The next week over. So yeah, I mean, right now it looks like a triangle. The only thing that's going to change that, excuse me. Again, if this is a triangle, this would be A. See, it's ABC, ABC, ABC. ABC is W, X, ABC is Y. ABC here, see? That's what it looks like. Let me zoom in 4 hours, see if we can get 5 waves up off that. So it's possible. Got a 1, 2, and then 1, 2, 3, 4, 5 gives us 3, 4. Slightly higher up is 5, and then ABC coming down. And remember, this is only good as long as this swing low here at 2488 holds. If we lose that, then the count is not that. Let's see. And how far is that pullback? That's a pretty deep pullback. Is that 78.6 already? 70.5 maybe? 70.5. So 70.5 almost exactly right there. But could the 78.6 is right here around the S1, so I could potentially see that. And so if we did get that pullback all the way to that S1 pivot, that's, well, 25.22 to 25.29. That'd be that 78.6 to the S1 pivot. We'd be looking up here at least 28.49, and then 29.25 gets us 1 up, right? Minimum. So you go 1, 2, 3, 4, 5 kind of idea. So yeah, as long as that this low holds here, I think maybe we've got a 1 and a 2 in progress toward this area if it continues down lower. And then we'll look for that move up at least to 28.49 going through it. So yeah, I would look for that. Bigger picture though, again, if this is a 4 in here, we could get a 5 down here toward this 1400 area. That gives the EQ here of this structure. That kind of pullback. And you can see that's running already. That's 78.6. I mean, there's nothing wrong with that. It's nothing terrible with that. It's a solid wave too. So yeah, I mean, possibly. The other possibility, I'm trying to figure out how we get this this rally up here on the weekly. You just get a 1, 2, 3 here. This looks like a flat. Looks like it could be 5 up. Yeah, maybe that is 5 up. Okay. We get this pullback here and then this move up, and this looks like 3 waves up. So it could be like an A, B, 1, 2, 3, 4, 5. So ABC, ABC. And this moved down, but it's gone down too far for that, I think, to be. So yeah. We'll just look locally here on that triangle, see if that triangle works out, and then get that move up higher. But all it needs to do, remember, all it needs to do is 5 waves up above the top end of the triangle. And then that does it, right? So it'd be 5 waves up that takes it above 28.21. That's minimum. That's almost the wave 3. So yeah, that's what I'd look there. So that's what I see at the moment here. I'm not willing. It's going to take some time to kind of dissect this big ugly chart, and really kind of see where it may be at, especially with these wicks down here. So right now, that's what I would look at. What if? I don't know. What if this is just a large triangle? What if this is A, B, C, D, E? If that's the case, then we would expect it to break out above the all-time high up here at 52.99. Yeah, so I mean, possibly it looks like 3 down. Looks like again, if this is a flat here, this could be 3 up and then get us 3 down here for that. But we haven't broken down into oversold here. We did on the RSI here. We did hit just slightly lower than this previous area that's held here. And in that case, again, took it down there. Previous low kind of in this area. Not that swing low, though. Swing low is the next one over. So it doesn't really work, but nonetheless, it is coming down there. I mean, if I look at this, just looking at candles here, I mean, and then the pivots, I love the rally off the S1. I like the lower wick. I like the bullish engulfing here, but we need to see some rally up higher. If we were to take out the pivot, I would be interested in the R1 here, which is the EQ of this supply here. So again, maybe it's not even a triangle locally, right? So if we break up beyond those triangle targets there, continue going up, I mean, I'm looking at the pivot. If we break out through that, I'm looking at the R1. If we can break out through that, I think we might find some resistance right here around 77.80 or so. But I would think then we break out above that and kind of, again, head on up here looking for that overall breakout there. Just trying to get some other looks here real quick before I go. See how this turns out. Generally support and resistance. It's not alternating touches, but it is something worth watching. We've got these swing highs kind of finding the same resistance here. Swing lows kind of finding the same support area with that R1 pivot. So if I'm looking at this and we get a breakout, an impulsive breakout above this EQ here on the monthly, I'd be looking for it to target the channel resistance. Looking at it that way too. So yeah. But it isn't alternating, so that kind of gives you a little bit there. But again, the other way to look at it would be this, the rest of this way down. And so, looking at it this way, I don't like that this runs along the bottom, but it does give us alternating touches, and so we've broken out kind of above that EQ there. So if we can get a rally up toward, break out higher here, again, target is the descending channel resistance, which happens to be the EQ of the other channel. So, I mean, I think it makes a lot of sense if we're breaking out there, potentially hit that and then pull back. And we want to see kind of this level hold here. And if we can get an impulsive rally then, so boom, boom, impulsive rally up and through that, I think, we look up here toward that. So, yeah. All right. Well, there we go. Bitcoin's still kind of going sideways here. Not giving any confidence on rallying higher up. Maybe just doing some wave 4 stuff here. Could be a triangle. I mean, if this is going to be, again, 1, 2, 3, 4 here. This could be A, B, C, D, E as a triangle. 5 will come down a little bit lower here. And then, but that would be just 5 down. And so, in that case, you know, it would suggest that overall we've still got some further downside. Unless there's something on that count that may be a bit up. But definitely, you know, watching those levels I talked about at the beginning there is the most important thing, I think, right now. If we can rally up above 23,929.35 here on Coinbase before it drops down below 22,392.88, then that should say that wave 3 is in progress. We're headed up there, right? If we do break down below wave 2, that's going to suggest A, B, and we've got C, in which case then, you know, initial target daily pivot, just because it's the daily pivot there, 22,250 area, potentially down here around 21,975.5. You know, so that kind of area would be my target area if it was to break down to my initial target area. Then you want to see it rally up. In that case, it would need to rally above this swing high up here at 24,251.08. Because if that's A and that's B, and this is C of 2, you have to get above wave B. In this case, if this is 1 and this is 2, then wave B is right here at 23,929.35. And that's why we're looking to get above that. All right, guys? All right, as always, remember the only thing you control in the market is how much you lose. So please keep working on that risk management. Don't forget you can join us over there at howtotradetowin.com. Get 50% off an annual Tier 3 membership. Learn how to trade correctly, guys. I can't do it for you. All I can do is you know, they say you can take a horse to water, but you can't make them drink, right? I can give you all that water in the world, but you've got to decide you're ready to do this. But if you do, if you think you are, jump on it while you can, get that low price, and then you'll also get 6 months of your choice of either our crypto, our stocks, or our FX signals. Or you can just go to the site if all you want is the signals and you're not really interested in learning to trade. You can do that there at the site as well. So the signals are inexpensive right now. They're cheap, but those prices will be going up. We get more in line with everybody else, what they're charging. So it is what it is. All right, guys. If you're in Discord, I'll see you guys in a bit. If not, hopefully we'll see you there at some point. But we'll see you guys on Friday, 11 a.m. Central Standard Time, okay? Risk management, guys. Risk management, the only thing you control is how much you lose. Work on that risk management more than anything else. All right, y'all. Take care.